My name is Bronson Hill. I'm the CEO of Bronson Equity. We do multifamily real estate. We're doing a lot of alternatives such as ATMs, car washes, oil and gas. I'm a Bitcoin investor. I'm a gold investor, a metals investor, and so I'm super excited. So we're going to get into the debate over really what it is where do we store value today, right? If you have money in a bank account, you're losing money every month. They say it's only 3-4%. I think it's much higher, but you're losing. Whatever you're losing, you're losing. And so where do you store? It's harder to do real estate because of debt. It's harder to do other types of things. So do you put it in gold? Do you put it in Bitcoin? Do you put it in other types of things? That's what this is going to be about. We have some just amazing rock star panelists here. I'm super excited to do it. So hopefully you're fired up because I'm fired up. So we're gonna go ahead and get our guys up here and do our panel. And we're gonna go ahead and get started here in just a minute. So I'm gonna welcome them up. So you guys have to accept being moved to the webinar. And then just hit that little box there. We should be set. Okay, awesome. So I'll give some quick introductions here. It looks like we've got all our panelists up here. So welcome, gentlemen. So quick introduction. We've got Mark Moss from Market Disruptors. Welcome, Mark. How are you?
Awesome. Hey, Bronson, I'm doing great. Thanks for having me here. Ready to duke it out and fight and yell and scream with all these guys.
We were saying I should have sent you guys each boxing glove so you could like punch the screen when you're going at it. So awesome. Love it. We got Bridger Pennington, who started Fund Launch and also runs a crypto hedge fund. Welcome, Bridger. How's it going, brother?
Good to see you. I'm just happy I'm on Mark's team. You know, we're gonna go at it. So excited to be here. Should be fun.
Yeah, these guys are doomed over here, boy.
Yeah,
this is like a tag team wrestling match. So yeah, I think they I don't know, well, it'll be a good fight, I'm sure. Russel Gray, the financial strategist, the former co-host of the Real Estate Guys podcast. How are you doing, Russ?
Good.
Awesome. Great to have you
here.
Yeah, really happy to have you. And then we got Mr. Gold himself. We've got Dana Samuelson, who's with American Gold Exchange. Welcome, Dana.
Hey, Bronson. Thanks for having me. It's a privilege to be here, especially with these younger whippersnappers in the Bitcoin realm.
Yeah, I love it. Well, we're gonna have a good time. We're gonna have a really good time here. So we're going to get into it. We'll just jump right in. We are going to do some questions at the end. So if you do have questions, you can put them in the chat or in the Q&A, but we will circle back to them later at the end. So maybe hold your questions. But let's get in. Let's define this debate. We talked about, right, where do you store value, right? We see inflation is continuing. We see, it's harder to get into certain types of assets because debt has changed. The lending market has changed. Credit markets have changed. Let's start with Mark. Let's talk for a minute. Why don't you set the table a little bit? Bitcoin. So I know you are heavily invested in Bitcoin. You love Bitcoin. If I'm new to Bitcoin or if I'm somebody who doesn't know anything about why I should get into Bitcoin, why don't you talk a little bit about what Bitcoin is and why you're such a fan of it?
Yeah, certainly. I think, first of all, just to answer the question that you said, to kind of like storing your value or whatever. And so I just have built my entire business and investing career off of a simple concept that is just money goes where it's treated best. And so I think about it that way. And I think the Ray Dalios of the world have done a lot of damage, I think, to the way that money is made and stored and multiplied, if you will, with this over-diversified fund. And it's a lot of complication that benefits Wall Street and the mutual fund managers, but it doesn't benefit the individual investor. And so I think the individual investor should go into a couple of things that they understand very well, that they can control, like Warren Buffett says. Put your eggs in one basket and watch the hell out of that basket. And it goes where it's treated best. And so what is best? And that's a different word that we're going to hack it out and debate on this call. But to get into Bitcoin specifically, it's a technological revolution. I believe it's a lot more than just a technology. It's created an entire technological revolution. About every 50 years, we have a new technological revolution. Some people call these K waves, chondroitin waves, and that's like the industrial revolution, steam engines, railways, electricity, steel, heavy equipment, oil, automobiles, oil fuels, and mass production. Then we had the microprocessor, which brought personal computers, telecommunications, the internet, et cetera. And we're entering the next one, the sixth one right now. Bitcoin, decentralized technologies is really powering that. And the important thing to understand is that all financial markets are driven by that current technological revolution. So the last 50 years have been dominated by telecom, internet, personal computers. The last 50 before that, Ford, GM, GE. Before that, oil, steel, etc. So Bitcoin is representing, and one of the main pieces, it's not one technology, it's a cluster of technologies, but it's powering this brand new revolution, this decentralized revolution. I talk about it. And for the first time, it has created a way for us to have digital scarcity, true digital scarcity. And it's really a 0 to 1 moment, if you will. It's creating fire. And you don't recreate the wheel, right? You just have the wheel. And that's really what it was. And so for the first time, we have now leapfrogged. For the last 1,000 years, basically, we've been stuck in the same paradigm of using this ledger money and trusting somebody. And even though technology has brought us to a point where we have instant transactions, the settlement time is still from 1,000 years ago. Sorry, gold guys. And so Bitcoin now represents a way that we can have custody, final settlement, we can have custody, and we can transmit it peer-to-peer without a central administrator, without a third party that gets in the middle of that. So it's revolutionary. And I think when you think about, and we'll talk about this, if we think about it from a broader context, I ask a lot of young people the very simple question: why would someone ever give you money? And the answer is they would give you money because you've solved a problem for them. You've created value for them. And so if you think about it, that we make more money by solving higher value problems. You make personal computers for everybody in the world, like Bill Gates, you get pretty rich. Now, I would say maybe the oldest problem in history has been, how do I store my assets? How do I store my wealth in a way that can't be stolen from me? So me and my neighbor, we join together and protect ourselves from another neighbor, or one village against another village, or one kingdom or one country. And now Bitcoin has solved that problem. The oldest problem in history. So I think there's a lot of value there. Obviously, we're seeing how much value is being created there. We'll get into a lot more, but that's kind of how I would frame it up for now.
Yeah, thanks, Mark. That's really great. It's a good way to kind of set the table a bit. We'll stick on Bitcoin here for a bit. I know, Bridger, you do a lot of things. You run, you help other fund managers to start. You have a crypto hedge fund, which primarily you're doing a lot of alternative coins and stuff as well. But let's talk, since it's kind of a Bitcoin focused event, let's talk for a little bit about what do you think the main obstacles are for Bitcoin to achieve adoption as a global currency in terms of regulatory and just kind of the usage of being able to use it freely in a way that actually really becomes more widely used than what it is now.
Yeah, Mark had a great explanation there on obstacles. Well, we've already seen them. The major obstacles have been regulators, right? Governments feel threatened by this potential threat to their currency, which is massive. Me and my partners, we're very pro-regulation. We actually want to work in tandem because, and for years we were praying, one day, could you imagine if BlackRock and Fidelity had an ETF and it was on like the stock exchange where you could buy Bitcoin? And we just had that happen a few months ago. The Ethereum ETF, that it's paved and should be coming out very soon. Rumors of a Solana ETF are coming out as well. And so regulators and governments, want to quell and make sure it's organized and controlled to not get out of hand. Now, I think to Mark's point, we think it's inevitable. It might just be a matter of time, but the software, we think of it more like technology. The blockchain technology that is behind what's driving what Mark just described is so transformative. It is so amazing. It's inevitable. It doesn't matter who's in office, who right, left, whoever it is, what country, across sectors, it eventually will win because it is such good technology. The underlying technology of a blockchain where you can have a public ledger. And if you're not familiar what blockchain is, and we'll maybe define this for a second, the most simple example I can give of what a blockchain is, for example, if I'm going to send Mark $10,000 across the world, I've got to use currently the SWIFT system. It's going to take 3 to 5 days. They're going to take some fees. I got to transfer my dollars, send it across the world. If I send it to over a blockchain, how it works, and I have to use a centralized system, the first system, I have to use a bank or intermediary banks or a SWIFT system that they confirm Bridger has $10,000, and then they send it to Mark. A blockchain is decentralized. And so one example would be there are 10,000 independent computers around the globe. You can call them miners or nodes, but let's just call it 10,000 computers around the globe. And in this example, let's say 5,000 of them have to confirm that Bridger owns $10,000 and is sending it to Mark. And once 5,001 computers confirm that, the transfer happens. When we talk about decentralized, that's what we mean. So, and for example, to hack that network, you'd have to hack 5,000 independent computers that are around the world and different servers owned by different people that are in someone's house and in someone's building and somewhere else. And it makes it incredibly hard to manipulate or hack. And that's why the idea of a public ledger and or a decentralized system like blockchain is massive. You see this, and I'll end with this. I know you want to get on to other points, but this massively affects, like Mark talked about, moving and transferring capital, especially for people that are in destabilized countries, in countries like a country, Tanzania or Lebanon or whatever country you want to name, where maybe things are not so stable. You don't have to pick up gold bars. You don't have to have bills. You don't have to use a SWIFT system or a centralized government if you're a trucker on the Canadian border, right? And people, they start freezing bank accounts and seizing assets because you're protesting. If you have something on a ledger that's done on a decentralized system, it's near impossible to stop, which is pretty freeing and pretty cool. Like Mark mentioned, this revolutionary technology. So I'll stop there, but that's kind of the way we view it.
Yeah, no, that's great. I want to kind of set the table for each, and then we're going to kind of go at each other a little bit of why you like yours more than the other, kind of compared to the other. And so we'll kind of go after that, and that's where the gloves come off, I guess, right? And we're going to go for it. So let's go to Russ now. Russ, let's talk about why gold? Why now? What's the case for gold? I mean, we had a gold standard from 1834 to 1961, 1879 to 1933, or you could say up to 71. Is there any chance we go back to a gold standard? And how do the BRICS play into it? So lots of stuff there, but maybe you can just kind of set the table a little bit for why gold.
Well, I think that the first thing we have to really think about, and Mark talked about it, is what is the role of money? What is the problem you're trying to solve? People have been trying to do this for the longest time. So everything after that is kind of the utility of the currency. And there's a difference in currency and money. And I think that's something that people don't understand. The way I explain it to people is I take two quarters. I take a 1964 quarter and a 1965 quarter, and I hold them out in front of someone. And I say, in 1965, either one of these things would buy a gallon of gas. In 2024, only one will. Do you know which one and why? And I think most of us know the answer is the 1964 quarter, because it's made of silver, which is money, compared to the quarter in 1965, which is zinc-plated copper. And so the purpose of money is to hold its value over an extended period of time. So as a store of value, you have to pick something, and whatever society agrees on, that thing is going to be that has that unique ability to do that. Bitcoin's been pretty volatile in terms of its purchasing power. It's been a fun ride up. If you got in at the top, then it was not a fun ride down. Gold, I think, and silver as money have been a little bit more stable, more time tested. So, I think we do people a disservice if we try to get into this big debate and confuse everybody like one is better than the other. I just think they're different. And I think there's a place for each one in somebody's portfolio, depending on what they're trying to do. But if you just want to look at what is time tested, time proven, and really, what drives the financial system isn't just the power of the people, because that's really what we're talking about. What do people want? Well, the people who control other people, the government, the central planners, they have preferences too. And right now, their preferences are they're trying to move away from the dollar. The United States obviously is not trying to do that, but the rest of the world is trying to do that. You mentioned BRICS, and we could spend a little bit of time talking about that. But in this geopolitical environment we're in, where the United States has been operating as the world's reserve currency and really running the global financial system, supposedly neutral, all of a sudden in this conflict with Russia, decided to lock Russia out of the system. The rest of the world saw that, and it's not the first time. But the rest of the world saw that, and they've been making a concerted effort to de-dollarize. In anticipation of the consequences of that on the U.S. dollar, people have been looking for alternatives. I think Main Street has been moving into gold. You've been seeing that happen at Costco and Walmart. There's precious metal stores popping up everywhere. And they're also doing it by going into Bitcoin, depending on what their level of understanding. I think younger people tend to be more comfortable with technology. I'm an old guy. I understand that. I think the older folks remember when gold was money. I remember being a kid when silver was in the coins. I remember watching live Richard Nixon take us off the gold standard. So, thanks to Dane, I'm not the oldest guy here, but I'm close. Okay. So it's really not an either or, but the central banks right now, in their effort to insulate themselves from the impact of de-dollarization, are loading up on gold and have been loading up on gold for quite some time. And so when you consider that governments have the ability to decide what is going to be the currency, at least as far as being able, what they're going to tax you in and what you have to earn money to pay taxes in, and then the banking system, what they're going to lend in and what you have to earn money to pay them back in. There's going to be a lot of pressure on currencies, and in particular, still the dollar. And behind all of that, you got to look at what's going on with the central banks. And you can't deny that gold is very much part of the global financial system. Bitcoin may get there someday. It's not there yet. And I just think that depending on your time horizon and what you're trying to accomplish, you have to take that into consideration. I wouldn't go all in and bet Bitcoin to the exclusion of gold, and I certainly would be open to the idea of having Bitcoin in a portfolio, even if you're a believer in gold, as I am.
Awesome. Thanks, Russ. Well, I think these guys are crushing it, huh? Let's give them some love. Maybe put something in the chat, give them some emojis, let them know how awesome they're doing. I think it's always fun to celebrate folks when they're doing well. So great conversation. Dana, let's talk about gold. Obviously, you are in the gold business, the silver, the precious metal business. You're a dealer. Talk to us about what you see, you can add to what Russ shared about why gold, why now, inflation hedge, and just historical value of gold.
Well, thanks, Bronson. Following these three guys is kind of hard. They're so good. So I'll do my best. So gold is the oldest form of money. It goes back to ancient times. If we have a new technology wave every 50 years or so, as Mark says, gold has survived about 50 of them so far. It's a long-standing, most trusted asset with no counterparty risk, which I think is one of gold's biggest attributes. It has no counterparty risk. Now, in the modern financial system, where we have fiat currency, where the monetary system is backed by nothing but the full faith and credit of the government that issues that currency, there has been some mistrust or distrust over the currency as the finances have gotten upside down, and we've gone into deep debt. And the weaponization of the dollar after Russia invaded the Ukraine has made a lot of countries on the eastern side of the world not want to use the dollar, which is what Russ said. The problem is they can't get out of the dollar as fast as they'd like, but they have been getting into gold as fast as they can. So when the central bankers that create this debt issue are buying gold at record rates, that's got to tell you something. The U.S. has the world's reserve currency. What does that really mean? It's power. Now, we've been benevolent with this power for most of the time that we've had the world's reserve currency since 1945, until Russia invaded the Ukraine, right? That's what we've done. We've used that power that we've had to say, hey, no, that's not something that's acceptable, so we're going to penalize you for it. By the same token, central bankers don't like the challenge that digital currencies are going to give them. And they could change the rules. We were talking off camera before we started. Bridger's dad has a book, and it talks about how sometimes the rules get changed. And Bridger, I'll let you talk about that a little bit more. But central bankers don't like the fact that their authority could be challenged by digital currencies. And I think that Bitcoin is a real threat. It is becoming accepted, but gold has got a track record that you just can't beat, and it is universally accepted around the world. So I think there are some trends in place that make gold in demand now that we just haven't seen in volume like this since gold was money and currency. And it's going to continue. It's going to drive the gold price higher and probably the silver price higher. We'll have to see what kind of a challenge the governments make to the digital currencies when they come out with their own central bank digital currencies, which we know they're all working on. So I think there's an issue to discuss there. But gold is the world's oldest, most trusted form of currency and money, and it absolutely has no counterparty risk.
Awesome. Thank you, Dana. I appreciate that. Okay, so guys, we're gonna put the gloves on now, and I want you to kind of we're going to turn it to the other asset, right? And it's okay if maybe you invest in, but you're on debate club now, right? So you're going to be like kind of bashing the other guy. So Mark, I know you are heavily invested into Bitcoin. You may own gold as well, but just what is it like? What do you see is wrong with gold, or why don't you have a high amount of your net worth in gold versus Bitcoin? Like, what are the things that you don't like about it that limit it for you, that make you say, I'm going to put a lot into Bitcoin?
Yeah, I think it goes back to kind of how I opened up by saying just money goes where it's treated best, and that you should invest into a couple things that you know and understand very well. And so when I think about that, so when we say what is the best, gold's better, Bitcoin's better at what, right? And so we have to kind of break that down. So I could certainly make the case for lots of reasons why gold's better. For example, it's a much better paperweight than Bitcoin is, right? That'd be one way that gold is better. So we might want to break it down into like ways that it's better and then ways that it's worse. And then we're all different, so we kind of have to decide for ourselves. But one of the ways that Bitcoin is better is that it's been the best performing asset in history. So if you like to make money, it's certainly better from that standpoint. If you like to transmit money peer to peer around the world, in the information age, the internet age, then Bitcoin is certainly better. If heaven forbid you ever had to go somewhere and take your assets with you, then Bitcoin would certainly be better. If you needed to a point that Dana made saying that gold is universally accepted around the world, I would actually beg to differ that. I travel around the world quite a bit. As a matter of fact, I'm hopping on a plane to Australia tomorrow. I'm in South America. I've been down a couple times this year already. Last year, I spent a month in Europe with my family, and I see Bitcoin being accepted everywhere. I see Bitcoin ATMs everywhere, and in all the money change places, I see them accepting Bitcoin. I've yet to ever see one merchant accept gold. So I'd highly also debate that. And the reason why they can't is the problem with gold is you don't know what you're getting. So I have no idea what the purity of the gold is, nor do I have any idea what the weight of the gold is. And of course, I can get a spectrometer and I could figure that out and whatever, sure. But in daily transactions, that just doesn't work. And so it's not universally accepted, and it can't be universally accepted because of that purpose. And you talk about no counterparty risk, it doesn't really work without counterparty risk because of the features that I've just explained to you, right? It's heavy, it's bulky, I can't carry it, it's not universally accepted. Nobody knows what it is to accept it on a value. So then it has to go into an intermediary like a bank. And so the only way gold can work is if it has a counterparty, which is what caused it to fail in the first place, right? Once it was in the banks, they took it. But going back to getting off the attack here and getting back to why Bitcoin is better, like I said, one, if you like to make money. So right now, what's driving financial markets and assets higher is one thing. It used to be the economy stupid. Now it's the liquidity stupid. Assets are moving based off the global liquidity that's being pumped into the system by central banks. That's why most people, God bless Harry Dent, I've read like 5 of his books, but that's why these people are wrong. They don't understand that something changed in 2008. The entire financial markets changed. What drives markets today is global liquidity. And we can see based off of that different assets have different sensitivity ratios. So for example, the S&P 500 is 95% correlated to the global liquidity. We can see gold actually does pretty good. It's a 1.4% sensitivity, which means for every 10% rise in global liquidity, gold goes up by about 14%. So it's beating. It's not just keeping up like the S&P 500, it's actually beating. But Bitcoin has a sensitivity ratio of 8.95. So for every 10% rise in global liquidity, Bitcoin goes up by 90%. So one, I prefer to, again, put my money where it's treated best because I don't have unlimited amounts of it. I try to put it to, the highest and best use. And so I believe that not only has it factually gone up faster, I believe it will continue to do that because of the scarcity. So number one, I put it there because that's where it makes the money. I put it there number two because, again, I live in the information age, not in the Stone Age. And so I need an asset that keeps up with me in the information age as well. And number three, like I already kind of broke down, really because of understanding technology cycles and the way they work, I understand what's going to drive the market for the next 50 years. And it's not going to be Ford or GM or oil, and it's not going to be gold either. It's going to be Bitcoin and decentralized technologies. And so because I don't have an unlimited amount of money and I don't have an unlimited amount of time to study every single asset, and I like my money to do, work harder than I am, for me, that's why I think Bitcoin is the best. And, the last thing I'll just say, and I'll kind of hand it back over, just one more jab at the gold guys here. I don't know why I got invited to go speak at a mastermind down in Mexico City about 2 months ago. It was a Sovereign Man, and I'm a huge fan of James and Sovereign Man, so of course I said yes. But
Yeah.
I really wasn't aware that Peter Schiff bought it, and now it's Schiff Sovereign. And so here I am giving this presentation at their mastermind, and Peter Schiff's there. And then, of course, he has to get up and debate everything I had to say. And the only thing he can really say that gold is better than Bitcoin is the same thing that Dana said, which is it's the oldest store of wealth. That's really all it has going for. So we have something called the Lindy effect, right? So the longer something's been around, the longer it most likely will, if it's a durable good. Obviously not a banana is the case. But so gold does win the Lindy effect, and that's what Peter Schiff hangs his hat on, and Dana made the same case. But I would actually argue, because I would say animals have probably been a longer store of value than gold. But I would also say that, like candles were light for 5,000 years too, and then we got electricity, right? And we used to yell or send a homing pigeon or a telegraph, and now we're doing Zoom. So things do change, and the Lindy effect, while in certain cases is somewhat relevant, I think in this case it's certainly not.
Awesome, Mark. It was great. Thanks, man.
I'm just happy to be on Mark's team. That's what I said.
I know.
On Mark's team. So
I think the gold guys are about ready to jump through the screen and strangle you guys, but it's good. And we're creating, it's like artificial. You watch these reality shows, and the producer just kind of made all the drama that happened. We're creating drama here. We're making it better. So,
hey, I'm just laying out the facts, man. I got the data points.
Love it. Bam! Get that the boxing match. Awesome. Well, Bridger, let's have let's hear your thoughts about why you are, and obviously you're a younger guy. So what is it that you see younger people like about things like,
can I have the gold guys respond back?
Oh, okay. Let's do that. Let's go back and forth. Let's go back and forth. Yes. Who wants to go? Who wants Russell or Dana? Okay.
Who wants a piece? Who wants a piece?
No, I don't want to just have them staring me down. So here we go. Let's hear back. Then I'll respond.
I'll try and get this right. Mark, there are gold coins that have been made that go back to the 1600s that are recognized around the world for their purity, their content. Maybe we don't have that culture in the United States, but we have it in Europe, we have it in Asia, we have it in India. So there are plenty of gold products that are easily transferable. You got to carry them around in your pocket. And there are cultures around the world that are based on gold. So they're ongoing.
Let me just ask a question about this. So we go point by point here. You're a numismatic coin dealer, obviously, right? And so I agree. The only gold that I do own, by the way, is numismatic coins, just by the way. So it's the only gold I do own, besides gold miner stocks. But you're a coin dealer. So if I was going to buy, let's say that here I am, I'm in America, I could be India, China. If I'm going to buy a 1600 coin, right? That's this predated coin or whatever. And I'm going to spend, I don't know what that's worth, 500 grand or whatever I'm going to spend on that. Do you think I should probably go, or whatever it is, I don't know, $1,000, whatever the amount is. But let's just say that I'm going to buy this really old coin, this really rare coin, to the point that you're making, a 1600 coin. Do you think I should go have it checked out before I would give up the money for that coin? Would you advise that? Should I do that?
Mark, there's hundreds of thousands of Swiss 20 francs made in the teens, 20s, and 30s that survive today, that everyone around the world knows exactly what they are. They're modern minted.
Yeah, but you were saying you said a 1600 coin.
They go back as far as 1600. They go back to ancient
times. And I'm just asking a question. It's a yes or no question. If I'm going to buy a 1600 coin, would you advise me to have it checked before I gave up the money for it? It's just a yes or no question.
If you're going to buy a rare coin, you should have it independently certified.
Great. So then how does that work in commerce where I carry that around in my pocket?
I'm not talking about those kind of coins.
You were the one that said 1600, not me.
I said as far back as 1600.
Okay.
Don't cherry pick. Okay.
I was just repeating back.
There's a coin show in Germany, a precious metal show in Germany that happens every year. There are people lined up outside the door carrying tens of thousands of dollars worth of cash. They can't wait to get in to go buy physical precious metals. Friends of mine go there every year now, right now, 2024. So there's plenty of demand for physical metals for the reason we don't trust central bankers. I forget some of the other.
But I think Mark's driving the point of counterfeit risk, right? There's a lot of these coins can be counterfeited. You have to have a centralized person to verify, like an event that isn't a legit coin. How do you get over counterfeit risk?
There's dealers around the country, around the world. I mean, banks in Europe have had traditionally precious metals desks within the bank so that you can trade gold in your bank.
Yeah, so you can take it to a central entity, and they could let you know if you could do the deal or not.
I'm not saying they're
So that's
decentralized. I'm saying
Thanks for making our case, Dana.
Well, you guys are tough. You guys are tough. Russ, I need a little help, Russ.
Okay, I'm in. Is that a tag in?
That's a tag.
All right. So this is awesome, by the way. So I really appreciate you guys. And we're just having a lot of fun. So, Mark talked about, hey, if you like to make money, Bitcoin is better. What is money? If you like to make dollars, fiat currency that they're devaluing 100.
If you like to see your purchasing power go up. If you like to see your purchasing power go up.
Okay. So purchasing power goes up and it goes down. Right. I mean, today gold was up, Bitcoin was down 3%. Right. It's very volatile, which is fine. That's fine. But if it's a store of value, it should be somewhat stable. But you say you don't know what you're going to get, right? Bitcoin, at least you know what you're getting. Yeah. With gold, you say you don't know what you're getting. With Bitcoin, I know exactly what I'm getting. Nothing. I'm getting a string of code. I can't hold it. I can't touch it. If it's
like a true boomer, Russell.
If it's
only code has no value.
Yeah, if it sinks into ship. No, here's the thing, and I'm just messing with you because it's not. But you read these reports of these ships that sunk, 500 years ago, and they open them up, and somebody found, I think, $50,000 of cash, and the paper is all damaged, it's useless. But they find these coins, and these coins still have their value.
Mark,
Bitcoin's
those coins, Mark.
What's that?
So Bitcoin, you talk about the idea that, hey, with Bitcoin, it kind of self-validates, and that's a great feature of blockchain, right? That's awesome. But there is a system for validating coins as well. I can take coins to somebody and they can assay them, and then I can know that I have what I have. It's not as efficient, I'll give you that. And so if we're talking about what's efficient, electronics are always going to be more efficient. But the question is what are you really trading? So when I try to explain to people the difference between currency and money and what happened and how the dollar became currency when it used to be money, I do the quarter thing like I did before, but I also use this example like a gallon of milk. And let's say I'm a farmer and I'm out there and I create a gallon of milk. I have a real product. It provides a real value. And I go out there and I say, hey, Dana, I'll give you 2 gallons of milk for a suit because he's a tailor. He says, fine, that's great. So we trade. And pretty soon there's all this milk, and let's just assume for a minute that milk doesn't spoil because gold doesn't spoil. But just to get the idea, we're running out and we're trading, our commodity. But we're referring it to it by its unit of measure. So even though we're trading milk, we start calling it gallons. And pretty soon one day, nobody bothers to look inside the gallon container to see if there's anything in it. They're perfectly happy just to accept the container. And that is how the central bankers took us from where we used to use currency to represent trading something of underlying value, which was money, to where we just are out there trading currency. I think Bitcoin has the potential to become a currency. And I think if you marry it to something of real value, now you have something to talk about. You can marry the efficiency of the blockchain. You can marry the efficiency of the technology. And again, technology changes, and you always, somewhere down the road, somebody might invent a new technology, make the old technology obsolete. And I saw your presentation at Collective Mastermind. It was awesome. And, you moved me more to believing in the future of Bitcoin. I still don't think it's an asset, though. I just think it's a currency, it's a technology, and it's got to be backed by something. Now, it doesn't have to be gold. It could be a basket of commodities. There's a lot of different things it could be. But I think when we get to the point where we are trying to trade something that is nothing but a unit of measure, the challenge is you're not really, it doesn't represent anything of real value unless people accept it. Now, once people accept it, it's like anything else. So I'll just say this. There was a time when people were making a lot of money on tulips. They were making a lot of money on pet rocks. They were making a lot of money buying Charles Ponzi's stamps. And some people made money and some people didn't. And so it didn't mean that the people were making money. Just because somebody's making, quote unquote, making money on it doesn't necessarily mean it's real or even valid. And I'm not saying Bitcoin isn't, but I'm just saying that's not a very valid argument to say, oh, just because I'm making more currency, I get more purchasing power. People get more purchasing power all the time in Ponzi schemes. I'm not saying that's what this is, but that isn't necessarily the litmus test for if the thing's real or not. So I think—
Can I add 2 points?
Yeah.
Yeah.
So yeah, on that argument, and it is a valid argument. People ask me all the time, well, where's the underlying value of Bitcoin? So let's explore it. First thing I'm going to say, and I actually want to talk about the doomsday scenario too, but number one, roughly $8.4 billion has been spent on infrastructure for Bitcoin mining and nodes. So that's something. If you look at backing, at least there is capital investment to a decent magnitude, $8.4 billion being put into infrastructure to make this succeed.
Bernie
Number two,
Madoff
there's a
had an
limited
office
supply
and
of 21
employees,
million.
too.
There's 21 million Bitcoins that can be created. I think most of you guys know that. The third thing I want to share, though, which is talk about a boat sinks in the ocean. The gold is still there. I believe Bitcoin is the most nuclear-proof device or thing humanity has ever created.
Yep.
There's roughly 18,000 nodes, or let's call them Bitcoin, like I mentioned again, those computer systems that manage around the world. There's roughly 18,000 in the world. If there was a nuclear conflict and the whole world was destroyed, and we waited 10 years, and you found one of those nodes, just one of the 18,000, and plugged it in, it has the entire ledger, every single wallet, every single purchase, every single device of all 2 point whatever trillion dollars of Bitcoins, all right there, and you could plug it in and it would work again. I believe it's actually the most nuclear-proof thing humanity has ever created.
Untested.
Well, gold is untested on a nuclear scenario.
Gold is
I want to
pretty
ask
much
a question
survived
here real quick.
everything from the beginning of human commerce.
I want to ask a question real quick about Bitcoin because
No, it's not your turn. It's not your turn.
it's not my turn. Yes, yeah, that's right. I'm the referee in the middle with the whistle.
Me and Bridger are right in the middle of this thing. We gotta go. Go ahead.
Coming back, I'll put it back to you, Mark. But I want to ask this: another issue that I've seen with Bitcoin, and I'm not, I own both, but 20 to 30% of the Bitcoins that have been mined have been lost. There's elaborate schemes. People that I know that heavily invest in Bitcoin. Even I think, I've heard personal stories of millions of dollars being captured just from internal schemes and other things like that. How is security and just, the risk of loss, affect Bitcoin? Or is that something you see will get better in the future? Or just, I think that's a central issue we should discuss as well.
Yeah. So certainly, right. And actually, I was on another podcast earlier this morning with the president of Trezor. So Trezor makes a little hardware device like this that you store your private key. And a private key allows me to have access and move my Bitcoin around or whatever. And you can back it up with like 12 words. But it's up to me to keep those 12 words secure. So if I put it in my house and my house burns down, I lose my 12 words. That's no good. Someone breaks into my safe and takes my 12 words. That's no good. But it would be no different on a gold standard, right? So if I had a lot of gold, I can't put it under my pillow. I would probably go bury it in the desert and I'd make a treasure map. And what happens if my house burns down and I lose my treasure map, or if someone steals my treasure map? How much gold got lost because it was buried in the desert and someone forgot where that gold was? So I think that's a very simple answer, apples to apples comparison, if we want to look at that. But what I really want to do is just go back and hit a couple of the points that Russell made here, because I think there's a big misconception that could be probably cleared up pretty easily, because I know Russell and he's a pretty rational guy here. So the first thing I would just say, kind of a couple of things that you said, is that you said that Bitcoin goes up a lot more. It also goes down a lot more compared to gold. It's more volatile, and of course it is. So I concede you that point, no problem. But volatility works both ways. Volatility goes up and down. We would never want to invest into an asset that doesn't ever move. We want it to go up. Now, volatility again goes both ways. So how do you go from $0 of value to $1.5 trillion of value without volatility? Of course, the answer is you don't. And so certainly, yes, Bitcoin is more volatile, which is why it goes up more.
All right, so I got to jump in. I got to jump in because see, this is dollar denominated thinking, and it's the same argument I have with the gold guys. I go into these gold conferences, and everybody is hoping gold will go up, which basically means that dollars are going down.
No, it doesn't. It doesn't. So I talked about it in purchasing power. So for example, a house is about $400,000. It's about 390,000 euros. It's about 3.7 Bitcoin. It's about 47,000 tons of rice. It's about 12,000 tons of oranges. It's about 1,400 barrels of oil. So everything's always a trade. And so we want to look at
It's
things
thing for thing. I get
in
you.
comparison of pricing. So when I said it's not going up in US dollars, that's a manipulated number. It's going up in purchasing power means it gets me more of those things that I want, more gas for my core, more steak for my, my plate, etc. But I want to say, so one, yes.
So if you go back to tulips and pet rocks, there was a period of time where their purchasing power was strong.
Yeah.
But I don't see BlackRock and Fidelity purchasing tulips and pet rocks.
Yeah.
I mean, we have institutionalized this asset class to a major degree. And back to purchasing power, I mean, the gold guys have had a tough little go. I mean, 2012 to 2022, you guys had a flat decade.
In the era of the most money printing in history
of history. So essentially you lost for a decade straight. And now I know JP Morgan Chase was manipulating markets for a couple years, and they got fined $1 billion for that. But it's an interesting argument when you go back to value created. And now just recently gold spurred on, and I'm excited. I have some gold in my safe at home. I have a lot more Bitcoins, but it's an interesting argument. So go ahead.
There was a couple other points I wanted to hit. So first of all, I just want to nail this point down. So one, Russell, do you agree that volatility works both ways? It's a price moving up or down. Is that correct? Yes or no?
If you're looking at it in dollars, but
just a period. When things move against each other, it's volatile, right?
So forget dollars. Forgetting dollars.
So we have a measurement. It's called a Sharpe ratio, and it measures
ratio between thing for thing.
Right. Okay. So if gold goes up, if Bitcoin goes up more in gold, then it is more volatile by nature. Then the second thing I want to say is this one is spoken like a true gold boomer. So this is another thing this is where Peter Schiff and I just don't understand. So first of all, there is no such thing as intrinsic value. All value is subjective. Now, you might say that food has intrinsic value because you can eat it. But then why did last night I throw away my leftovers? They were worthless to me. But if I was on a deserted island, I would give every single last penny for that food. So it's always subjective. Now, what it's subjective on, and this is what I think you're confusing. This is what Peter Schiff is confusing.
I don't think I used the word intrinsic value, by the way.
No, so you said but you said that you need the Bitcoin doesn't have any value. It needs to be, to your quote, I wrote it down here. It needs to be married to something of true value.
Because it's a unit of measure. It's a currency. It's not. It's not a commodity. It's not
a commodity. So what's the definition of a commodity?
Well, I mean, to me, I'm just saying it's not a tangible thing. It's a unit of measure, just like a digital dollar. A commodity. You can purchase things with a digital dollar, but that doesn't make it.
Let's be clear on definitions here. What's a commodity?
So
a commodity is something that I'll give you my definition of a commodity, and you can tell me if you agree or disagree. A commodity is something that there's no common issuer. Anybody can go get it in the world. Anybody can go get gold in Mexico, in the US, or China. Anyone can go get it. And no matter where I get it from the world, no common issuer, it's just in the earth. And you can go get it anywhere in the world. And no matter where I get the oil, the wheat, or the gold, it's fungible. That's a commodity. Equities, on the other hand, are a company, a common issuer, right? We know the Howey test, right? So a commodity is that. So Bitcoin fits that definition of a commodity, which is why, per the CBOE and the SEC, it's been labeled as a commodity because there's no common issuer. Anyone in the world can go get it, and it's fungible no matter where we get it. So it is a commodity by definition of the word, as well as the legal representation of a commodity. Number one. Number two, back to the thing. So there is no such thing as intrinsic value. So Peter Schiff says that gold has intrinsic value because I can make cufflinks with it. But I said, Peter, you're confusing intrinsic value for utility. You see, gold has utility because I can make fillings and I can make gold-plated stereo connectors and I can make cufflinks. So there is utility with gold, but it doesn't mean there's value there. It's only value because people recognize it as value. And so
which is true of everything, and
which is true with everything
on that. Yep.
Yes. Okay, great. So then the question I would say, and I would ask you this question, and if you're honest, you're going to have to say yes to it. Then do you say that Bitcoin or you can say yes or no, but do you say that Bitcoin has zero utility?
I'm saying it's not physical. It doesn't exist.
I know, but do you recognize that Bitcoin has utility?
Yes.
Did you know there's 75 countries that women are not allowed?
It has utility. It's technology. Technology by definition has utility because it was created to perform a function. And
so it has utility.
Fantastic technology.
And people can value a utility, something with utility like gold to make a cufflink.
I'm saying people can become enamored of a unit of measure that isn't measuring anything. And that's what happened to the dollar.
This is the last point I'll make, and I'll cede my case here. The last point I'm going to make, because it needs to be married to something of value. It needs to be backed by something
Tangible.
You see, only debt has to be backed. So this is why I said like a boom or a gold person, because the dollar used to be backed by gold, but the dollar is a debt obligation.
It's a derivative of money. Yes.
So
the dollar is a derivative
debt
of money.
is backed. Debt is
and money is a derivative
of
of capital, something created of good and service.
What backs gold? Gold's just gold. Gold's just gold. What backs oil? Oil's just oil. There's value there because of the utility oil provides and the value that's been assigned to it. Just like Bitcoin, there's value based off of the utility it provides in the market that's assigned value to it. So there's nothing, it doesn't need to be backed by something. Only debt is backed by
gold
something.
Doesn't need to be backed by anything.
Of course it doesn't. I didn't say it did.
Right. Nothing needs to be backed by anything. It stands
Only debt.
It stands alone. But a currency needs to be backed by something because it represents something. You're transferring something. That the purpose of the currency is to transfer something of value.
Not when gold is a bearer instrument. The gold is intrinsic to that.
Guys,
what I'm saying is gold.
Finish it up here.
Gold took the role of acting as both money and currency and has stood that for a long, long time. Does that mean it couldn't be replaced? No, I'm not saying that at all. It just hasn't been replaced yet. Now, Bitcoin may end up being the replacement, but it hasn't replaced it yet. And I just think that, and to even call any of them an investment, I think is wrong because neither one of them are productive. I think Bitcoin is more effective, has the potential to be more effective from a technology perspective as a currency, just like a digital dollar is better than a paper dollar, and a paper dollar is better than an ounce of gold for currency. But in terms of a store of value that stood the test of time, Bitcoin hasn't earned the right to call itself money yet. It might, but it's not there yet. And really, it doesn't have the right to call itself a currency yet because it's not what's used in regular transactions. People are transacting in gold, at least at the central bank level. Governments are trying to repatriate gold from one place to another because they want it in their physical possession. It is backing. I mean, I agree with Jim Rickards on this point. People may think gold is a barbarous relic, but the global financial system still uses gold to back the currencies. And that's just a fact. Now, is that going to stand the test of time? I don't know. Will Bitcoin supplant gold and the fiat currency someday? It has the potential to do that. I'm not saying it doesn't, but as we sit here and now, I don't think Bitcoin is money, hasn't earned the right, and it's not currency. So it's still fairly speculative. And when you speculate on anything, whether it's legit or false, yes, you can gain purchasing power in the short term. But the jury's still out on Bitcoin. Now, do I wish if I could have gone back in time when I sat and listened to Jeffrey Tucker tell me about Bitcoin when it was pennies? Yeah, I wish I would have thrown a few $1,000s at it. But as soon as I would be able to convert it back into dollars, I would go buy something real like rental properties or apartment buildings or piles of gold. I wouldn't just sit there and hold it on my balance sheet and call it an asset. I would quickly convert it into something that was real. So to me, it's just an intangible string of code, has a lot of utility. Right now, it's got a bid and it's popular, and that's fantastic. And I would love to see any form of sound money supplant the fiat system we have today. But I just don't think Bitcoin's earned that right.
We're going to take a pause here for a minute. Guys, this is awesome. Show them some love, guys, in the chat. And this is awesome discussion here. I see a ton of value on both sides. Love it, Mark, Russ. Amazing. Thank you. We'll take a couple questions here. We're going to kind of cool it off a bit. We're going to get into who you think won the debate, but we got a couple.
You didn't even let my teammate get his word in, though.
I know.
Come on.
Well, we got to get Bridger to share a little more, and then we got Dana to share some more, and then we have a couple questions here. So let's go to Dana first, and then we'll jump over to Bridger. So somebody's asking about storing physical gold. Kind of goes right in the conversation. What do you? I mean, that's one of the challenges, right? Is storing. What are some options for storage? Let's just jump into that real quick, and then we'll come over to Bridger.
Well, the good thing about gold is it's very compact. You can hold a lot of value in a very small space, and you can hide it in your house pretty easily. I do not recommend you put gold in safe deposit boxes in banks. I think that's a bad idea in case there's a problem with your bank. There are private storage facilities that are available that are run independently by professionals. There's not that many of them, but they are available. So you want to store it someplace where you have access to it and you can sleep at night knowing that it's safe. And those two things are not always compatible, but they're figure outable if you work on it.
Awesome. Thank you. Thank you. Bridger, I know you've been chomping at the bit there to add something, and we got these two guys going at it. So we want to make sure that you have something to share if you want to add something there.
Yeah, I'll talk about, I'll take a little different direction. I thought Mark settled our case very, very well on on why Bitcoin and to talk about gold. And by the way, I love you guys and I love what you're sharing. And I think there's a place for both assets.
Show them your book, man. Show them your book you wrote so they can see that you're
yeah. So we'll actually, I want to share my screen for a second if that's cool. We'll see if it pops up. So I want to share a few things that's actually happening right now. So we talked about dollars, how much money's been created. $1 trillion every 100 days roughly is being created. What a lot of people don't realize is what if I told you the dollar is actually doing extremely well? I'm going to share my screen for a second. People, at least from what the data is telling us, whoever's created, that's actually a tracker of how the dollar performs against other currencies. It's called the DXY. So if you look at the DXY over the last 3 years, hopefully you can see that. This is the dollar versus other currencies. And this is kind of a bigger conversation of currency and money and just where we are at. Now, I know we've printed a lot of money. We're in national debt. Everything's going down. The dollar is up 16%, if you can see right there, over the last 3 years compared to other currencies. Always about compared to what.
Right.
And compared to what, the dollar has actually done extremely well. We talked about the weaponization of the dollar, which I totally agree with, which I think was a huge mistake from the US government. But we have played a pretty interesting game on the macro level with dollars. And in this, we actually talk about this in this book of one theory is the US government, let's just call the United States government, that includes Congress, the Fed, the Navy, all of it together. The greatest export of the United States ever is dollars. We export dollars. We print 1 trillion of them and people work 80 hours a week. They lie, steat, and cheat to get more of them. And we print another 1 trillion and people want, it is the greatest thing ever produced as an export. And we export dollars to other countries in droves. And I believe we will do everything possible to protect our greatest export.
Yeah.
So for example, if you want to get off, we can talk about this like the petrodollar, or get off and trade large amounts of oil not using US dollars. Umar Gaddafi tried it, and he kind of got killed. A few years later, Saddam Hussein traded large amounts of oil not using US dollars. He kind of got killed. Vladimir Putin started trading large amounts of oil not using US dollars, and someone blew up Nord Stream pipeline in 2 places last year with a submarine and Navy SEALs. Who could have done that? No one knows, apparently. Who could have blown up Nord Stream pipeline? I love to hear this group kind of debate about this and talk about this. And this is why you see massive asset managers right now diversifying portfolios and moving things around. But one theory is the US government, and I'm just going to use that as a general term, will do everything in its power to protect its greatest export. We will put trade embargoes. We will put aircraft carriers. We will stop whatever happens. Every war that's going on, you can usually drive back to dollars. And as much as people want to hate on the dollar and say the dollar sucks and it's going down, and I agree, the math says it should go down. When you look at the DXY, it's up 16% compared to other countries' currencies. India had a flash crash last year when they announced they're going off the US dollar. China's been trying to get off, but they just can't. It is so sticky. And the last thing I'll leave, and I'd love to hear this group talk about this. People talk about we have $36 trillion in national debt. And I've made this argument, I talk about this a lot, of if we had zero debt, I would be more worried as a country than having 36 trillion in debt. And the reason for that is a national debt makes our currency very sticky to other countries. And by the way, I like dollars. If the dollar collapsed tomorrow, our lives would drastically change. I mean, world poverty has decreased. I mean, the dollar has produced some pretty incredible things. I don't want the dollar to crash. Yet I run a crypto hedge fund, so I'll talk about why I do that. But having $36 trillion in debt, the debt is owed back. It's not owed back in gold. It's not owed back in Bitcoins. It is owed back in US dollars. And if BRICS nations tank our currency, the world essentially takes a $36 trillion haircut. One theory is 2 years ago, China announced that they were going to sell all their treasuries. They had about $1 trillion of US treasuries. They're going to divest them. And what does the Federal Reserve do? They say, well, inflation's transitory. It's transitory. It's transitory, right? Don't worry about inflation. We're going to keep interest rates low. And then they hike rates at the fastest rate in history to 5.25. And what does that do to bond prices? It cuts them pretty much in half. It devalues them in half. So China goes, crap, we were going to sell $1 trillion. They're only worth about 500 billion now. Shoot, we want to get off the dollar so bad and we can't even get off the dollar. I mean, that's what collapsed Silicon Valley Bank. By the way, people don't know that. Like,
so Bridger, I'm really sorry. I have to kind of
cut me off. You're good. Cut me off. But that's the direction I want to hear from this group.
I feel like we could, if we had all day, I would just love to spend the day with you guys, like on a boat or something somewhere, just arguing with a drink in our hands on.
Hey, Bridger, let's get together in another time and place and have that discussion, because I've been tracking this since 2010, and you're 100% right. But you're also, you got some things I think that you need to understand a little bit better.
All right, we'll have a part 2. We're going to have a part 2 on this. So let's go around real quick, 30 seconds. If you have one last sentence you wanted to say, and then also how people can follow you, because I know a lot of people don't follow everybody here. So let's start with Dana. Maybe just one closing line and how people can reach you.
Well, I think there's a place for both Bitcoin, cryptocurrencies, and precious metals, gold and silver in particular. I do think blockchain is going to change the world. I do think that completely. My company is American Gold Exchange. My website is amergold.com. I'll put an email address, info@amergold, in the chat. If anyone wants a physical precious metals getting started guide, it's a very simple explanation of the most competitively priced, widely traded products that, if you're interested in physical precious metals, we recommend that you buy.
Awesome. Thanks, Dane. I appreciate it. Let's go to Russ. How can people, maybe one last comment, and how can people follow you?
So you can follow me just by sending an email to follow@russelgray.com. I'm in the process of setting up my new brand, which is going to be Main Street Capitalist, after 20 years as a co-host of the Real Estate Guys radio show. I think the last thing I'd like to say is, first of all, I don't disagree with these guys at all. I think blockchain and Bitcoin in particular have an important role to play in the future. Anybody that is a sound money advocate, anybody that wants to empower Main Street, I think I am a teammate of and want to help support. The one thing that I will say on that Dixie comment is that the dollar is strong compared to other currencies that are failing faster, but the dollar is still failing. Just ask anybody on Main Street who's going to the grocery store or trying to pay rent. So inflation
100% agree. 100% agree with you.
Yep. Okay.
Thanks,
anyway, we could have more to say about that at another time, and I'm looking forward to having that conversation.
Thanks. Okay. Awesome. Thanks, Russ. Mark, how can people follow you?
Yeah, you can find everything I do on onemarkmoss.com. That's the number one, just onemarkmoss.com. So a couple of YouTube channels. I do a lot of content, my podcast, a ton of free reports. I have a brand new free ebook that I just wrote, and it's how to retire on tax-free income from Bitcoin. So it's a strategy on how to build wealth with Bitcoin and leverage it to have tax-free income for life. So I break the whole thing down, and there's a calculator. You can calculate it out. It's all for free. You can download it off my website, onemarkmoss.com. But I would just say that, of course, we don't all agree, and that's great. That's what makes a market. And, when everybody does agree with you on Bitcoin, then there's no upside left. So get in before all these guys agree.
Awesome. Thanks. Bridger, how can people follow you and get in touch?
I was going to say the exact same thing, Mark. The moment everyone agrees.
We're teammates. We're teammates.
I know. The moment everyone agrees, yeah, Bitcoin's awesome, is I'm going to start selling maybe. I will see how it goes. But I totally agree. It's time to not, it's already been hatched. So thanks for having me, Bronson. A great panel. Fun talking to you guys today. I have a company called Fund Launch. We help people launch investment funds. So private equity, hedge funds, venture capital funds. We've launched 210 funds last 2 years. I believe in democratizing Wall Street, allowing regular people to learn about funds. So we have a totally free course. If you guys like taking courses or videos, we have a full free course, like 28 videos on how a fund is built, how to put one together, totally for free. Just pop your email in. And I'll drop it in the chat there at fundlaunch.com. So totally free course. Just join it. And you guys can learn about funds, how they're built together, and go follow all these guys here and read Bronson's book. And it's awesome. So thanks for having me, Bronson. This is a great panel and fun hanging out.
Guys, this was a lot of fun. I don't really see any comments of who won. I think it was a really great debate. I think there were some amazing points on both sides. I loved it. Got a little heated, which in a good way, but it was really, really good. Really a lot of fun. I don't like debates where people are just really mild mannered. And so thanks for taking a strong opinion there. It was really, really good. So if you want to check out my book, it's right behind me here. Fire Yourself became an Amazon bestseller. I also got my new book here, which is called Rich Brain. I'm in the process of writing it. It's how the wealthy change their brain to change their bank accounts. Really, what are the wealth habits in over 2,500 millionaire interviews I've done. So I'm excited for that. Love to be a guest on anybody's podcast or help spread the word. Thanks for being here. We'll look forward to seeing everybody next month. We've got an awesome panel. I believe it's July 11th on mindset. We're going to come up with some details with that shortly. But thank you, everybody. Thank you, our panelists. Really glad each of you are here. And we'll look forward to seeing everybody on the next event. Thanks so much.